Hello and good morning. Welcome back to Therapy Sessions with myself and Jose. It's been a long time actually since we've had a therapy session, which means the market has gone up for a long time. Jose, how are you today?
Pretty good, Neil. Pretty good. I mean, like you mentioned, right, it's been a while since we've done these therapy sessions here. So good morning to everybody joining us. Hopefully no one's freaking out. We have Brandon who wants therapy though. I want to freak. Mm, some people are just poison, right? So some people just love the poison. That's okay too. Um, but yeah, Neil. Good morning and good morning to everybody.
Yeah, I mean, it's you'll see it's not that bad, right? Yesterday, this was basically it for yesterday. It doesn't even look half bad, right? And unless you're, of course, only here in tech, then yes, that was red. But all the rest, finance, health, consumer non-durables, all of that here, we see it flat slash green-ish. But tech did get hit yesterday, like across the board. Tech got hit quite hard, actually. If we look at, for example, a couple of the names that we have here on the watch list, most of them were down 5 to 10%. Non-company specific news is just sector-wide, a little pullback, right? Iron down 9%, Palantir, same thing. Same with Rocket Lab. Duolingo got pulled back here as well, 7%. Nebius down 7.3%. AST down 6%. So basically, everything that went up significantly over the last couple of weeks and months got a tiny pullback yesterday. With him, it's actually very interesting. It's at the 200-day moving average right now. So that's going to be interesting to see how that works out. But the majority of the stocks are still very close to all-time highs, which not for
great.
great.
And Neil, like you mentioned in the beginning, right? If you were in the left side of those charts, you probably had a bad day yesterday, where it was pretty much a tech bloody day where everything else was up, and that's why it's important to always also, I think, look at kind of like that long-term picture, which you and I both discussed, right? I mean, there's been a lot of days where like the fintech, the overall healthcare market have been taking a hit, while the tech market has kind of seen a nice run up. Obviously there's some days suck for certain markets, but especially when you're exposed to them, and sometimes we don't notice when those other markets are doing bad just because we don't own them. So for me, like, obviously yesterday was bad as I am mainly tech exposed, but I've known that the fintech, the healthcare, some of these other markets have taken quite a hit throughout the past year as well.
Yeah, like Joseph says here, portfolio wise,
Mhm.
it really only pulled back to the value of a week ago, which is exactly,
Which is
which is very
wild.
good. Uh,
Yeah.
but I mean, the thing with these, let's say, pullbacks is
Mhm.
that usually I will previously it goes down a percent one day, a percent the next day. Nowadays, it's like we go down 10% in one day,
Yeah.
5%, 10% in one day, and so you have these pullbacks that act very aggressively and gets you to opportunities quite quickly with a lot of these names. I'm not saying that everything's buy the dip, although over the last 2-3 months or so, every dip has been bought. Like we
Yeah.
dipped and we went back up for popular names. With Palantir, it's basically now back at prices since, well, just after, I'd say, or just at the previous earnings report. Rocket Lab, we're making our way towards the 50-day moving average here. It's getting very interesting to me to start averaging up even more.
Yeah.
With Nebius, I mean, I would love for it to fill this gap, so go back in the 50s. I think that's what I'll aggressively add even more. Might never happen. Might never happen. That's the
Mhm.
thing. We don't know how long these pullbacks will last, but we have
Yeah.
patience. We have patience with a lot of these names.
Mhm.
Um, for now, if we look at the markets in
And
Europe,
let's just go by saying, right, Neil, I think we both can agree this pullback is not a pullback that either of us would go load up the
all in.
truck and put. Yeah, exactly. So just want to kind of let that be known. I think that that would be the same for both of us right now, right, Neil? It's
Yeah,
definitely maybe something a little dollar cost average here and there, maybe throw a little extra cash, but nothing where we load up the truck.
yeah, exactly. It's some specific names might have
Mhm.
already pulled back significantly over the last couple of days, but yeah, it's not an April type of scenario or an August 5th of last year type of.
Mhm. Exactly.
Yeah, it's more of a okay. If some names are interesting, I might start dollar cost averaging already. Right now, we'll go over maybe a couple of those names. I just want to go over a couple of things for the major markets here. Europe, again, mixed. I would say it's more green than red across the board. Same with Asia. US pre-market right now, we are again flattish for now. Bonds wise, 10-year remains unchanged, 4.3, and euro dollar 1.16 right now. So yeah, there is the Jackson Hole thing this week. Jerome Powell will speak. I just don't think that he will say that many things that we
What day is
haven't
that
gotten before.
exactly, Neil? Or we're gonna get the real news? Do you
I,
know?
I think it starts today until Friday,
Mm.
and I think he speaks either today or Friday or maybe each and every day. I don't know. But there are various people that speak from today until Friday. Um, so yeah, the thing here right now, like I said, there are. Well, yesterday, funny enough, Intel was still up 7%. Novo Nordisk
Yeah, that's when you know
2%.
the market's broken.
I mean, to be fair to Intel, there is like there is a reason why, right? There's the momentum from all of the external news affecting the business, so it makes sense. Uber, I was very surprised
Yeah,
to see.
same. I was surprised this one just held up. It was one of the few green
Yeah,
yesterday.
well, literally one of the few greens on my watch list here. Uber being up, but okay. Oscar was very green. Well, everything was very green when we ended the stream. Um, but Oscar was basically flat here. There is a very very good podcast with Invest Like the Best with Oscar CEO and the Invest Like the Best hosts. I've booked it if someone's interested to hear more about the CEO. Incredible life story as well. Um, highly recommend that podcast. But yeah, overall, Nvidia is very interesting now to see if we go back lower before the earnings or we can recover before the earnings right now. Any specific names? Because I know you made a list of that small
Yeah,
ETF thing. Um,
for me, obviously when the market pulls back, tend to stay away looking at those new names that I was looking at and kind of go
mhm,
back and focus on my big names. The ones that really caught my attention are Marvell for me in the semiconductor space. Marvell is definitely one I'm enjoying. both CoreWeave and Nebius. And for both CoreWeave and Nebius, I really do like this as a selling a put opportunity, especially with massive premium on both of them. I think CoreWeave for even like a 67 put is right now like $3 premium you're getting, $3 or $4. So technically you're getting it at around, if it executes, you're getting it at around $63 per share, which is it's starting to look a little bit more attractive. So for me right now, it's looking at more selling puts, and I think for me, Neil, is going to be the names I really like right now were Marvell, CoreWeave, and Nebius for a little bit aggressive in this little not load the truck moment, just in so little aggressive in this little buying opportunity. One thing that I found pretty interesting, Neil, was looking at kind of the valuations of CoreWeave and Nebius. And I was looking at enterprise value to sales ratio, forward sales ratio. And historically, they've been kind of trading really similar to each other. And the reason I do enterprise value is just because obviously we know CoreWeave comes with a lot of debt. So it kind of evens it out a little bit by giving you the true cap there. And now there's becoming a huge divergence between the two. And CoreWeave is kind of like becoming less popular, it seems, while Nebius has kind of stretched out a nice amount, even based on those forward numbers. Again, maybe analysts haven't updated the forward projections on Nebius, so that could be creating a little bit of hesitance in there. But it is pretty wild to see kind of that divergent happening. I'll probably share the chart really quick when I pull it up. How about for you, Neil? Any names really kind of like got your attention right now?
Yeah, so I'll just go over a couple of things that chat mentions here. I'll just answer that. So I'm looking very much at Nebius. I mean, I added at 66 after the earnings report. So, by the way, if the volume is up or down, I don't know. My mic volume decides to go up and down automatically for some strange reason.
It does. Yeah, it's weird.
Let's see.
Now it went high.
But it's too high or it's good enough?
That I don't know how it's related to me. So I think that's the most important, that we need to be equal. So I guess that's going to be more of let the chat let us know. Yeah. So see, now it went a little bit low.
Yeah. No, I know. I see that here. Let's
Amateur hour.
No, it's very strange. Why? Like I set it at a certain volume and then suddenly it's like, oh, nope. We go down.
Mio, I don't know if you can go to audio on settings. And if you go to audio, there is an advanced feature where it puts auto gain control. I don't know if you might have that one off or on. Whichever, maybe just flip it off and see.
Yeah, off. I put it off now.
Okay. Let's see if it works.
So, yeah, we'll see. So Nebius, I do hope that we go down a little bit more. I do hope that we go down a little bit more. I know that the sound went down a little bit right now. But if not, then that's fine. If we can go a little bit closer to 60s, I think that should be good. That should be good for that. SoFi wise,
sorry, Neil, before you go to SoFi, have you ever thought about kind of like that selling a put situation? If you do get executed, great, because you're getting it at cheaper. And if you don't, you're just collecting kind of the premiums. That's something you've thought about or not a big and usually I only do those, Neil, for companies I don't mind owning at that price, selected price. It's not like I'm going to go sell puts on like Could or other ones that I don't own. But have you thought about doing something like that on your portfolio?
Yes, but I don't know why. I just because I talked about calls, right? The Intel and the PayPal calls yesterday. But for selling puts, I don't know, for some reason I'm like, you know what? I'd rather just keep it cash and we'll see what happens. And if it happens, it happens. If it doesn't, it doesn't. But at least I have my cash in case maybe another name drops and I don't have that cash freed up. But yeah, selling puts definitely is a good strategy. Like if you really want to own it, like it doesn't work if you don't want to own the name.
Yeah, and I agree with what you mentioned, right? I mean, selling puts, you have to buy the 100 shares, so it has to be a way where even if it gets executed, you don't use up all your cash that you want to use in general. So I think that's also important when doing anything like that. So you have to understand, if it get exercised, how much of my cash is it going to use? And if it's too much, maybe like you mentioned, selling puts might not be the best direction, especially if you keep expecting more of a dip.
Yeah, and no, it's you sell puts so you can increase your long-term positions.
Mm, mhm.
Um, it's not for, I mean, I don't, for both of us, I think we're doing this
Yeah.
just to increase our long-term position, not for
Mhm.
short-term short-term gains. Um,
Yeah, exactly.
for short-term gains, I rather just buy shares straight out if there is like a huge disconnect instead of getting
Mhm.
stuck in options and have the risk of basically losing it all. But yeah, so Nebius, SoFi right now, I have patience because it is already a very, very big position for me. So I'm
Mhm.
not in a rush to buy more. Rocket Lab, I think around 40s, maybe I will already start adding a little bit more. So Nebius, Rocket Lab, and then I'd say Micron is down 5%, by the
Mm.
way, right now. There
After
is another
hours?
pre-market because of
Oh, what happened here?
another idiot note that came out from Jeffries. Jeffries' desk calls Samsung passing Nvidia's HBM4 reliability test a sensational headline. Pre-production set for late August with mass production likely November, December, earlier than 2026 expectations. Jeffries sees meaningful rotation versus SK Hynix and downside risk for a
Uh,
Micron, which again it makes zero sense because last week
mhm.
Micron literally told us that they're in a very, very good position. They feel like
Mhm.
calendar year 26 is again going to be a year where they will sell out
Mhm.
like 25. And so again, this thing right here, well, Micron, they say are at 21% market share. In my opinion, this again is an overreaction. And so if I get an opportunity to buy Micron again, maybe I don't know if we can get. I don't think we'll go as close as $100 here. But if again we see an
Yeah.
overreaction here, I'll take the opportunity. Oscar is still a small position for me, and I want to increase that
Oh, that's what's
over
been
time.
pulling up a little.
Yeah,
Nice.
we've had some nice momentum here for Oscar, and Iron is one since they report next week, and we've seen so much good news
Mhm.
around. Yeah, Wolf, for example, someone comments on that. Iron, I think, has a lot of momentum. I think it's the better company out of the
Mhm.
bunch. They're yet to report earnings. I think yesterday I saw a post of someone quoting, I believe, the CEO or one of the executives saying that they've got over 3 gigawatts of
Mhm.
plant or connect at probably plant
Mhm.
energy, which is more than what we've seen yesterday on their website, which means that
Mhm.
maybe he might have revealed something that they should have revealed a week from now. And 3 gigawatts is quite a lot. Of course, that will take time for it to be online and connected, but Iron is one that I'm looking at quite closely. Yesterday it went down 9.4%. So we'll see what happens with that. But yeah, overall, it's Nebius, Rocket Lab, Micron, if I get the opportunity, a little bit more of Oscar Health as well for now. For now, then the rest, I rather keep some cash. With AMD, we'll see. It has been pulling back a little bit. Let's see how
Mhm.
low this one goes. Right, we said previously,
Mhm.
if we can go back in the 140s, if that happens, I think I'll be very comfortable adding there. But I have patience. Like this is not the end of the world. I don't think it's the beginning of a
Yeah,
30% pullback
100%.
either. Um, so we'll see. We'll
And
see.
Neil, let me just share screen really quick here on
Mhm.
Aaron because that was interesting. Because I remember I just did the video. So 3 gigawatts, they've talked about that one in the past already. Or I don't know if they talked about it. They definitely shown it in their presentation. Here in this is from their last quarterly earnings. They talked about in one of the biggest under development is this Sweetwater 1 and 2 in Texas, and that alone is going to be a 2 gigawatt. Then they have the Childress in Texas, which is 750. I'm pretty sure if you add 275, 2,750 here and add this extra, you're going to end up with nearly that 3 gigawatts of power. So it does seem like maybe the market doesn't know because obviously it's not a follow-up name, but they have discussed that in the past and how they're planning
Yeah,
on
yeah, yeah.
getting to those levels.
The 2.9 was discussed because I think this is a
Hmm.
total of 2.9 approximately. But from what I understood from the post is they said over 3. which means that
Over 3.
they found
They have
another
an
100
extra
megawatt.
200.
Yeah,
Yeah. Okay. Got it.
somewhere.
Um, I wonder if Horizon is here. So Horizon is not here. Um, we have, where's Horizon here? Maybe, I don't know. Oh no, that's childless. But yeah, that's interesting. Okay, so that's good. Um, and then I want to show you that other chart before we go. That kind of Nebius and CoreWeave. But I don't have CoreWeave. Let's see. One quick second, Neil. Stop rushing me.
I'm not saying anything. I'm not saying anything.
Stop rushing me. Okay.
Should look into Voyager Technologies. It wasn't Voyager, or maybe that's another Voyager, that crypto scam or something. Wasn't there a Voyager
Not
crypto?
sure. This is the
Voyager.
other graph here between I found that interesting. So Nebius and CoreWeave here. We can see, I mean, CoreWeave it's a recent IPO. But since then they've actually been trending pretty quick, pretty similar until recently, where you kind of see this huge divergence. Now in this chart, just obviously it's one data point. There's a lot of data points that could probably change some other view perspective, but in this chart, it's shown that CoreWeave is now a Nebius is 100% more expensive than CoreWeave. Based on this, obviously a lot has changed throughout the next few. CoreWeave is going to have some more dilutions in shares. They obviously have a lot more risk with the heavy debt, so you're definitely going to be paying less for this than for a Nebius. But I thought it was so wild how they're starting to the divergence is so large right now.
Yeah, I guess one, because when you see the diversions happen is when Nebius started to go up a lot, and
Hmm.
then CoreWeave stock started to go down
Yeah.
significantly, basically down 50%
Yeah.
since the highs. And yeah, I still think that Nebius is a better
Go ahead.
business. Manuel on X, MV Cunha on X interviewed one of the founders yesterday. Very, very interesting.
Yeah. So that was the
Yeah,
NCP guy. No.
yeah, yeah,
Uh,
yeah, yeah. MVC, Manuel,
MVC.
yeah, Cunha is a very, very interesting conversation,
Mhm.
like explaining the way they're thinking about really becoming a hyperscaler, like the multiple levels of layers that they're working on, not just being a commoditized business. He did touch on the lepton part of the discussion, what they're seeing with lepton, how they're gaining from it. And they basically said, look, we can become a commoditized business in the future, but that's going to be because of us, not because of a lepton, not because of another competitor. It's because they didn't execute correctly. I found that a very, very good conversation. He really explains in depth how they're trying to be that specialized solution. Like, it's true that we're
Mhm.
going to have many neo clouds, but to be the one neo cloud that will become huge, you need to have like very, very good integration, that huge ecosystem, multiple
Mhm.
layers of solutions, which is why they want to tackle the enterprise side of things, which is why they're working with highly technical enterprises like Shopify and Cloudflare. Because if you can work with them early on and attract them, you will automatically grow and attract all the other technical enterprises as well. Because the Shopify is
Mhm.
highly technical, very, very tech first, AI first. And so if you can make sure that Shopify is happy with you, I think it will be easier for them to start to attract other major enterprises in
Mhm.
the future. They did talk a little bit about the other businesses that they own as well, how that integrates into
Mhm.
their plan. It's a very, very, I mean, when you think about
Yeah.
it, it's a $16 billion company that can become a giant in the future.
Yeah.
If of course, again, like they said,
Uh,
execution is key.
yeah. And Renato here is wondering kind of the main difference, Neil, between CoreWeave and Nebius. I wouldn't say, at least on the top level overview, they kind of look very similar in forms of a form of AI infrastructure. I think the biggest difference right now for Nebius is, first, Nebius, like you mentioned, Neil, does have a lot of other avenues like the AV ride, autonomous vehicles, and it does have a bit of investments, nice equity ownership in a few AI companies, especially some that deal with data, which is definitely becoming popular right now. So focuses on AI infrastructure, has other avenues, but more importantly, within the AI infrastructure market, it tends to have a little bit more solutions than CoreWeave. So it tends to have higher margins and tends to be maybe some might say a little bit more stickier because of all those other solutions. Now, CoreWeave, I think CoreWeave is a big AI infrastructure player. It is just pretty much bare metal. So pretty much their biggest customers are just renting them out for their GPU solutions. It might seem sucky, but I think that's where we're needed right now. It's just pure bare metal. So that's one of the reasons CoreWeave used to be one of my favorites during IPO is bare metal. You're getting kind of the big contracts from your OpenAI, your Googles, and all those, and those tend to be long-term contracts. The second thing is obviously both have a partnership with Nvidia in forms of a true, I forget what they call it, Nvidia preferred partner. But I do believe if there was a favorite between the two, for Jensen, I think right now it would be CoreWeave, not just because of the overall um, position sizing in their 13F. I could care less about that. I think it's just more of the way it's been. It's Jensen has talked about CoreWeave plenty of times, and I do believe CoreWeave being able to produce some of the things a little bit faster has made it a poster child for AI infrastructure for Jensen. So they both come with their pros and cons, if the AI factories are going to be real, and I think they are starting to get there, both can definitely have a good future for them.
Yeah, no, I agree. I agree. I mean, for those interested, I highly suggest to go watch that interview
Mhm.
from MVC yesterday on there, because they do talk about their partnership with Nvidia. He asked the question basically. We know that Nvidia is a strategic investor. You get some priorities here with Nvidia as well. But have you thought about maybe using AMD as well? And basically said, look, for now we have so much demand that we're really just focused on what we have with Nvidia and that partnership. And we'll
Yeah.
see maybe in the future if customers want and need
Mhm.
AMD, then we'll do that. But for now, they're really focused on their partnership with Nvidia. He basically also said, look, Nvidia needs a player like Nebius as well in order
Yeah.
for the ecosystem to expand. Because if you
Yeah.
have a real good full solution player like Nebius, that of course is heavily
Mhm.
integrated with Nvidia, so win for Nvidia as well,
Yeah.
because they basically
And
integrate in the whole solution there as well.
I think companies like Nebius and CoreWeave Neo are NVIDIA's way to say stick it to the big guys, right? I mean,
Yep.
the big guys, they're developing their own ASIC solution, right? So they're pretty much in competition with NVIDIA right now. So NVIDIA's like, all right, you guys are gonna go in competition with me. I'm gonna go and make sure there's other hyperscalers out there that are using almost solely my solutions. So I do think this is a warning, a massive, massive warning shot to a lot of those hyperscalers. Because if we see CoreWeave, I mean, CoreWeave, what, $25 billion in capital expenditure? That's a massive. And then what do you have here for Nebius? Is it closer to 5 billion in capex? I forget what was or
No, I think it was
3 billion,
two.
2.5.
Yeah.
And I mean, that's right now. Obviously, if they start to expand, it can grow a little bit faster.
Yep.
But I would I was just listening to a podcast. I mentioned it yesterday with Dylan Patel, semi-analysis guy, and it's like, what happens if Nvidia just decides to say screw you guys to everybody and just builds their own AI cloud solution? Like they would be the top dogs. Who would be able to beat Nvidia and cloud solution if you can't even make a chip better than Nvidia? Like they could just order all the chips, become the biggest cloud server provider available, and just dominate the world with AI chips and AI infrastructure. So I do think big tech needs to tread lightly when they think about getting away from NVIDIA's ecosystem.
The counterpoint would be, would Nvidia wouldn't Nvidia take a major hit at first? Because I mean, the reason why Nvidia is so big today is because of all of the
Yeah.
hyperscalers spending so much money on
Yeah.
Nvidia.
But if the AI market is as huge as it is, right, you're going to be collecting that money from your own AI chips. So as long as that market is bigger than the other, right, that in theory, that's what.
Yeah, I would still think they like the position they're in right now because the ecosystem expands naturally.
Yeah. Yeah, obviously. So that would be the preferred system. But if like
Yeah.
you see kind of all these other players kind of start to leave that ecosystem for any use case, NVIDIA could just kind of play the reverse Uno card and say, oh, you know what? Maybe I can enter into the space.
Yeah, no, definitely. First of all, thank you very much, Hams Harris. And Joseph here saying, don't hype them up too much. It would get to their heads. Trust me, it won't. It won't. Unless we reach
It's already
10,000
there.
viewers
Yeah.
every time. But I don't think that will happen anytime soon.
Question on this interview here before Nebius, before we pull over here with Canva, Neil. I forget that analyst names.
Manuel?
Did they talk about leptin?
Yeah. He asked
So
about DGX lepton and what they see from it. Did they see some traction? If they see it as a competing product, he answered that question pretty positively, actually. Like they see it as a good marketplace for them to get basically leads, and he said that afterwards there are just companies that go straight to Nebius for their offer.
Instead of
Yeah.
all right.
But yeah,
because he talked if it was just so it hasn't started yet. Did they mention kind of the timeline on that? Is it rolling out already?
Again?
Has leptin actually started on working? Did they talk about that yet? Or
yeah. But it's still very early days.
Early, okay, yeah.
It's still very early days to actually say whether or not it's a completely game changer. But they said that they have seen some traction from it.
Nice.
So that's.
I don't know why I want to click that bell. I feel like this is my extra click, and I'm clicking the like. What notifications do I have right now?
There was some question about Adobe Figma here, so I'm pulling up here Canva. So Canva apparently kicked off an employee stock sale valuing the design software company at $42 billion, up from the $32 billion last year. They recorded more than $3.3 billion in annualized sales and now has over 240 million monthly active users. That's quite something. That's quite something for them.
What is Adobe's market cap?
What was it? 170?
153 now.
Yeah. 153. So that's, I mean,
this is about 3.5 times smaller.
Yeah, and revenue wise.
Yeah, that's what I was trying to see. What was the revenue wise?
Because I mean, Canva at 3.3, okay, annualized sales, which means it's probably less right now because you can do annualized sales with Figma as well. And it also looks very, very good. But okay, let's say annualized sales 3.3. Adobe is what, 20? Maybe 22.
I'm not sure.
22.
22.
So 6.6 times more revenue than Canva, and it's worth, what did you say, 3.3 times more than Canva? Of course, I guess Canva is also growing maybe a bit faster.
Probably growing a little faster, yeah.
But I don't know if margin-wise they're better. Because I mean, Adobe, it's insane. Like the margins that they have is crazy. They report, I think, next week or 2 weeks, maybe a bit more. It's one of those names experiencing a big drawdown right now, but it's not like the business is not growing. It is growing, top and bottom lines, insane margins, gross, EBITDA, operating, net, free cash flow margins are. I just don't see how you lose money from it unless we see cracks in the business.
Yeah.
Unless we see cracks in the business. But yeah. Thank you for the super chat. Buy Nebius today, new position. Thoughts on Lululemon? I know Lululemon has also taken a huge hit recently. Back at a pretty big hit from the peak in 2023. That's a bit too much. Let's say last year, still a drawdown of 3%. Margin wise, of course, from the retail side at leisure is very, very good. I think industry leading margins. But growth, of course, growth has been slowing down. Growth has been slowing down, and that's the thing. I I don't think it's that attractive for me anymore. Nebius is way more attractive. Again, to start a new position today, you can always start small and then dollar cost average. Like I said, I would love it to close this gap here. I bought last time right here, $66, $67. My average
that was my
is
entry.
28. So I have time.
Neil, right here we have a question. I have a position AMD, SoFi, Nvidia. Will you guys recommend selling at this point, or should we be patient? Neil, I mean, obviously not personal advice here because that's not what we do. But I know you own AMD and SoFi. Neil, any thoughts on you selling?
Nope. Zero reasons to sell. That's the thing.
Yeah. I agree. So I own AMD and Nvidia. I mean, this is not saying that the stocks can't go lower, right? You know, that's not. You're not saying this is the bottom. You're just saying it doesn't. For you, these are opportunities that have long-term multi-bagger potential. So it doesn't matter if in the short term they dip a little, and they continue dipping, as you still believe you'll end up a winner in the long term of things.
Yeah, and again, especially these three companies, why would you sell? Just because the stock is up? Okay, then take some profits, I guess, if you need so. But all three companies are still growing and performing very well. So there's zero reason to sell for me. Any of those positions. I do want to touch real quick on this because this is something that annoyed me yesterday or 2 days ago. Lulu is Chris Camillo bet for this earnings call. I didn't know who this Chris Camillo was until he popped up on my feed. But apparently the guy, out of all of the investing possibilities and opportunities in the market, he decided that shorting Google today was the best idea he could find.
That's wild. The biggest AI company, one of the biggest AI company in the world, and that's the best short idea you can find.
Yeah, and the reason behind it is because he believes
not a SoundHound or some other nonsense.
Yeah, all of the revenue companies that are worth billions, no. But a Google that's highly, highly profitable and undervalued, that's the best short idea you can find, because he read a couple of reports that said that the search queries are fake and they are only increasing because of the queries inside of Gemini or ChatGPT. That every time you search for something in a ChatGPT, that counts as a search query. Even if that turns out to be true, you should be seeing a hit in return on investment from advertisers. You should be seeing.
That's the thing. That's the thing. It's all advertisers that use a platform could care less about how many views their ads get. What they care about is the amount of money they pay and the return on that investment. If that is improving and it's not that much more expensive, they're going to shift. I mean, we saw it with, I forget when we had that massive ad crash in 2022, companies were pretty much saying there's no real trust in relationships between your customer and the advertiser. The only thing the customer cares is all these advertisers are data driven. If your platform gives more data, more return on investment than the other platform, they're gonna stick with you. So that's the thing that got me. It's like the point of I read the tweet and sometimes I just get fired up. Neil, it's like queries could care less. It's all about the return on investment. And he didn't even talk about that once.
Yeah, I mean, and what also bothers me is that every time someone talks about Google, it's only about the advertising. Yes, I understand that Google ads and all of that is the majority of the revenue and the profits today. But why are we always disregarding all of, like, especially the cloud side of the business, which is growing very, very big, very, very fast, sorry. Again, the guy has done very well. I think, like in his bio, I see he writes going from 20K to 60 million. But then again, we all go from $1 to whatever our portfolios are worth today. So that's not really a selling point. But Um, yeah, exactly. Exactly. And even remember when that Apple executive said that for the first time in God knows how long, search queries traffic was down on
Mhm.
Safari, and everybody was freaking out. And then suddenly Google
Mhm.
comes out with like search query growth, search business growth, revenue growth, and then we're like, oh, maybe it is an Apple issue and not a Google issue. Um, but yeah, I don't know. I found it. You want to short something, fine, but Google is the best the best option that you found it's very, I don't know, very strange. Apparently I have to look at the company that I Credo.
Credo Technology, CRDO. Yeah.
Do you know it?
It deals in the AI semiconductor space. They kind of deal with like networking solutions. Kind of like similar like your Astera Labs. I think they do things like PCIe, other types of switches that help big players and accelerators communicate with each other. So it's definitely seen as a competitor to Astera Labs right now. So I'm pretty sure if you look at A Labs, the charts are going to look pretty similar.
Correct.
Yeah.
Correct.
Yeah. I
Interesting.
mean, it's definitely an exciting market. I just I don't know. I think the risk on these are uh, I already have enough AI chips, and I don't know if there was a question or thoughts with there. Neil, is sometimes I have too much exposure into just AI hardware itself that I think for me, like the bigger growth opportunities might be like the AI infrastructure, like your CoreWeave, your Nebius and stuff like that. So um maybe to still be in the AI space, but outside of just pure AI hardware. Um One of the reasons I'm not a fan of these, but
I
yeah.
mean, it has been growing very, very quickly. So that's the thing with these types of companies is you want to catch them right here, right
Mhm.
before they grow up so much. Still expected to grow 86% revenue year over year, but then
Mhm.
growth is definitely decelerating
Yeah.
extremely rapidly. I
Mhm.
don't know if yeah, I mean, the stock has gone up. It
Uh,
was $40 in April. We're now at 105.
yeah, but yeah.
So, okay, interesting.
Uh, and yeah, I want to talk to this. So Derek here, agreed, bro. Red days are ahead, but these guys don't care. I don't think it's that we don't care, right? I think it's as a long-term investor, through experience, red days come and go. I mean, it's just part of the market. Unless you're a trader, it's when you don't get emotional for either green or red days. I think that's the best thing that you can do as a long-term investor. Obviously, there's a difference between like, I'm happy my portfolio is green, but I'm not gonna go and YOLO on everything because I believe this bull flag continues. And same in the red days, like I'm not gonna sell my positions just because of 1 or 2 red days, or even a month or two of red days. All these companies that I own, I believe, are multi-growth opportunities. So red days, like um, this person mentions, are healthy. It's part of the investment world, and you're going to go through a lot of them. But trying to time the market is definitely not something I'm good at. So what I am good at is holding positions, buying a little bit, a little bit, a little bit, a little bit over time. And if we do see April lows, like we both did, we tend to go very heavy. And April's were my biggest buying days, and I was happy with those dips. We're nowhere near there right now, so there's nothing for me to do but just do these live streams and have fun with it.
Yeah, I mean, look at this is the S&P. Okay, this is the S&P. Dips are healthy, which is why you might say we don't care, because technically speaking, we don't. Like, this doesn't change anything for us investing wise.
Hmm.
It actually makes me more excited because I get opportunities to buy more shares of great companies. Um, Again, if you want to continue a bull market, having these pullbacks is a very, very healthy thing,
Hmm.
because you do not want to have a 2021 scenario where things are trading at 100 times sales and that's the norm again. Although, yeah, with the Shamat SPACs and with Cathy Wood raising a lot of money, you might say we might be in a 2021 type of scenario.
Hmm.
But yeah, we could go a little bit lower as well. But okay, that's
Hmm.
fine. Look at where we are. I mean, look at the amount of
Hmm.
dips or crashes that we had along the way.
Uh,
We just kept going higher and higher every single time.
And both of us, right? We both held over 2022s. I mean, I'm pretty sure you've had SoFi for a long time. Nvidia wasn't popular in 2022. Everybody hated Nvidia and AMD, and those were major positions in my portfolio. It's like red days suck and red months, bearish markets suck, which can last multiple months, even longer than that. But those are the times when real money is made for sure.
Yeah,
And
I mean, even
it's funny. Talking about it. It's like we're nowhere near those levels right now to be mentioning. But I just want to kind of showcase that red days are just part of the market ride.
yeah, I mean, even if you bought at the top of the bubble back in
Hmm.
2021, you would still
That's
be up
wild.
33%.
Yeah.
It's not bad, right? Not bad.
No, you would
Um,
have made that in like putting it in a savings account or anything.
yeah, exactly. So again, red days, especially after a huge bull run, especially, I mean, I take Palantir as an extreme example here, but yeah, the pullback that we're seeing right now with Palantir, fine. I mean, I don't think holders will care. I think you're still up triple digits just this
Hmm.
year. Um, but with any other thing, Robinhood's another one.
Mm.
SoFi is also another one here. So pullbacks are healthy. I do, now that we're talking actually about pullbacks, I do want to touch on this topic right here. Why is September the worst month of the stock market? Um, if we look at historically, S&P 500 average monthly return since 1928, September, as you can see, is the worst month by far. It's not even close. It's the worst month by far.
I
But
blame anybody who's born in September. You guys are evil.
um, they explain here the tier. I mean, those are just theories. But if you look at the majority of the year, you're up monthly returns even after September. Like, okay, September might be a bad month, but then again, maybe it might be a month where you just do your buying and then look at what happens 4 months in a row. You're on average, you're green. So a couple of theories here. One, portfolio rebalancing and tax loss selling. Okay, every single year, back half of the year, this is the story that's circulating, right? There's a lot of selling, and people say, "Oh, it's just tax loss harvesting," because especially in green years, you wanna
Mm.
you wanna balance it out. Okay, could be a good theory. Second, behavioral biases and investor psychology. Post summer reality check, end of summer optimism. I don't know,
Yeah.
especially not for
It's so
this
funny.
year.
The era too, right? It's like you create the prophecy you made you
Ah,
thought about, right? So
this is theory number 5, the self-fulfilling prophecy.
okay.
Yeah, this is and it's the theory number 5 you can apply for a lot of things. Like if so many people think X will happen, then Y will happen. Because
Mhm.
we're all thinking one way, and so okay, essentially, well, it's going to be it's eventually going to be the other way, because like if everybody thinks things will go down, then it will not. And if everybody
Yeah.
thinks it will go up, it will go
What's the
down.
back to school
Then you have,
effect?
yeah,
Oh, go
I
ahead.
don't know
Sorry,
what.
Neil. I'm like a fish going out of order here.
No, but also when I saw back to school effect, I'm like, well, are little kids manipulating the market?
My
What
little
the
one
heck is
isn't
this?
isn't buying stocks anymore. He has a secret account somewhere.
Uh, yeah, that was when I read this yesterday, I was like, this is strange. But yeah, then number 3, you have economic factors and business cycles. So again, profit taking, earning season, fiscal deadlines, and policy changes. A lot of things here are, of course, on average, because this year is unlike any other year. This year you have still high interest rates, still no rate cuts, maybe rate cuts. You have tariffs, so it's not apples to apples. It's just a theory, and you have to take everything as an average. Um, and yeah, the back to school here is reduced consumer spending and business cycle shifts. But then again, the reduced consumer spending, we've been talking about that for quite a long time, and it has been
Ugh.
a hit or a miss. Actually, yesterday we had Home Depot. Today we have Target. I think Target is down significantly.
Oh
But
well.
yeah, the banks, yeah, there are also some management shifts there. But yeah, these are basically the theories behind why September on average since 1928, almost 100 years ago, why it's a bad month, which means it's a good month to buy, technically speaking. Um, so yeah, that's why I don't know. I wanted to touch on that because if we do have a pullback or whatnot, we're at the end of August right now, and so makes sense. Makes sense to pull it up. There was something. Yeah, Heinz says here the Palantir short seems like a genius move. There was who's the short? Citron.
Yeah, I
I
think
think
so.
they started their short and they doubled down. I think yesterday they said they doubled down. I mean, so far it's working out, but they think it's going back to $40. I mean, to go back to $40, it has to go down
That's wild.
a significant amount, even from today's prices. It's down another 73, 74% or so. I mean, good luck to them. It's definitely one of those stocks where I wouldn't dare shorting. I mean, there's no reason for me to short anything, but a Palantir, short a Palantir at your own risk, for sure. For sure. We all know it's very expensive. Like
Yeah. Andrew
yeah.
left.
Yeah. Every
I
time
meant Andrew left. Yeah. It's always Andrew left. Yeah.
It's like he left Citron. But yeah, we all know, even the bulls know very well that Palantir is very, very expensive. But then again, it's also one of those companies that is growing very, very fast and manages to expand margins at the same time.
Curious to see. I saw one in that heat map. Oracle was one that was down a nice amount. I owned Oracle, but I haven't even really looked at it too much lately. Was just curious what down. Okay,
not too much.
It's wild. This one jumped to 200.
Yeah, I mean, same with Broadcom, right? Broadcom went above $300. So again, well, that's the prime example of Broadcom, right? A company like Broadcom doubling, more than doubling since April, is insane.
Yeah. I mean, but I hear Google is building a lot of TPUs, man.
Yeah, but that's why you have to be short, no?
Yeah, that's why you got to be short.
That's why you got to be short Google. United Health is holding up now above 300. Lots of, I guess this is also the thing, since a lot of these stocks, right, non-tech related, have been so hit, and they're trading.
They took a hit.
Yeah, they're not trading at a very, very good price. This might turn into defensive plays from here on out. I see someone talk about Crocs a lot, so let's touch on.
Yeah, let's look at that one. You own a pair, Neil?
I own 2 pairs.
Oh wow!
I own 2 pairs of Crocs already for over a decade or so. I'm a Crocs loyalist, but this this stock, I mean, has done nothing for the last 4 years, as you can clearly see. But it is, I mean, from multiple standpoint, I will show you it's very, very cheap from a PE standpoint. Crocs, let's see, it did crash last quarter because of what was it? Oh, Hey Dude. Hey Dude is the company that they
slowed down.
Yeah, slow down. Yeah. Even with Sydney Sweeney promoting it, it didn't help. It didn't help. But yeah, company worth $4.5 billion, revenue $4.1 billion. So that EV to sales or price to sales multiple is very, very low. PE, forward PE 7.9, trailing PE 20.1. But if you look at revenue, it's actually expected to decline, compounded for the next 2 years, and EPS the same. Margin wise, it's okay. I mean, it's maybe actually better than okay. But again, is it one of those companies that I'm like, it's a non-tech name, and I feel very excited about the growth that I might be getting from it? No, not really. Like a United Health, I feel the disconnect being much, much bigger.
Okay. Yeah.
Plus there is,
but I feel also it's
growth.
This at the end of the day is actually just a want and not a need, right? I think United Health and some of those others, you kind of have that. It's more of a necessity to some point where it can increase a little bit of the bullish theory.
Correct. Like you need health insurance.
Yeah. Like you said, you're a loyalist, but you have two pairs here of Crocs.
Yeah, but I helped them with their sales before. I'm not helping them every single day or every single year. Like my newest pair I bought last year.
Yeah, exactly. Yeah, so that was the trend. That was the point. So like even loyalists, like,
yeah,
don't buy. yeah, you don't buy the brand new Crocs 15 after the 14 came out or whatever, however they go with their naming.
Exactly. Talking about today's Pixel Day,
Oh,
Pixel
Google
10.
Day. Yes.
Yeah, Pixel 10 coming out today. I do wonder if they'll release the Pixel 10 with Project Astra in it, like the agentic AI
Oh,
inside the phone, the one that
yeah.
they showed us during a I/O event, because that would be a complete game changer. If
Yeah.
Pixel
I
10 is
hope
the
they allow
first,
some AI stuff.
if it's the first AI agentic AI phone that comes out,
Yeah.
I think that would be a game changer for them. Um, but yeah, that was Crocs. It's cheap, but I guess there is a reason why it is cheap. Um, Hims has been retracing all the way back here. Um, is it interesting at these prices? I guess it's more interesting here than at $70. But then again, if we do have more issues with Novo and then compounding drugs, then maybe it can go lower. But historically speaking, once it touches the 200 or goes a little bit under it, it has successfully rebounded every single time for a long, long time. So whoever is looking into an entry, I guess here might be a good opportunity. Might be a good opportunity for sure. Um,
Yeah.
I agree with Victor here. Oscar, but the thing with Oscar is, if you look at all of its peers as well, price to sales is a very bad and deceiving metric, because historically it's always been very, very low. That's the thing with these types of companies, is that the market never gives it a high price to sales, because you shouldn't give it a high price to sales because of the nature of the business. So price to sales for Oscar is what is it, 0.7 or something like that. But if you look at the other players, it's also 1 or also 0.8, 0.7. So price to sales on average has always been this low. It's not like previously it got a 3x multiple. It's always been around 1 or less than 1. It's always good to, if you look at the pricing metric, then look at the average of that company, and then look at its peers as well, and you see the main differences between them. Jose, I know we talked about this before, and a lot of people ask us about cyber security names.
Mm,
I just made a video talking about some cybersecurity stocks. This is an ETF,
mhm,
but this ETF is very strange, because the top two holdings are Broadcom and Cisco. This is
mm,
supposed to be a First Trust Nasdaq cybersecurity ETF.
mhm,
It's very strange, but I've looked at companies like the one that just reported, Palo Alto Networks, CrowdStrike, Fortinet, Sentinel One, and Zscaler, for example. You know what's crazy is that all of them are extremely expensive. Like if we look at a Palo Alto Network, for example, it's a company trading at a trailing P 110 times, forward PE 46.6 times. Yet, yes, it is expected to grow.
mhm.
14% revenue, 40% EPS compounded. But it's not the only one. If I go to CrowdStrike, which from a pure profitability standpoint is still unprofitable, free cash flow, it does generate free cash flow. But here as well, look at that forward PE, look
Yeah.
at that price earnings to growth ratio. Why do you think the market gives cybersecurity names such a high premium compared to other companies?
I think for even in the software space, this one probably has the most stickiness out of it. I think once a company chooses it, it's very hard to kind of switch out of to a different kind of cybersecurity player, especially with the top name. So I think that's the first thing. The second thing is um, most of these are looking at annualized reoccurring revenue.
Mm-hmm.
And even I wish there was a valuation metric for that. I think sometimes the market is opening. I think that might look a little bit lower than price to earnings or price to sales in some extent. So, I mean, I'm not a huge fan of cybersecurity right now. I think obviously the market expects a lot from them also with AI stuff. So there's that excitement, but these tend to always trade at crazy valuations. I think this is one where many people believe AI is not going to eat its moat. It's more going to make their products more needed. But that sentiment can change pretty quickly.
Yeah, I mean, we can all agree that cybersecurity is a necessary thing, especially in the age of
Mhm.
AI as well, agentic AI and all of that. But still,
Yeah, it's wild.
and that's why I think we don't own any specific
Mhm.
cybersecurity name. Like the
Yeah.
price you have to pay for it, it's just very, very high for what you're getting.
It's
Like
already a
even
premium to what you pay on a premium software company already. So it's like a premium added to that.
yeah, I mean, I guess I understand it's sticky, but a lot of them
Mhm.
aren't even profitable. Like yes, they generate free
Yeah.
cash flow, but a lot of them, if you look at their operating margins, they are negative.
Yeah. Yeah.
Um,
Hey, look,
Palo
Roberto
Alto,
and I agree.
yeah, no, I think we all agree.
Yeah.
Um, but Palo Alto Network's operating margin is, I think, now 12%, 11%, so that's fine. Fortinet is the least sexy name, but margin-wise, it's incredible. Incredible. Free
Mhm.
cash flow margin, operating margin, gross profit margin. It's the only one where I'd say, you know what? Actually, it makes sense because pricing-wise, it's also the lowest. Might not
Yeah.
be growing as fast as a CrowdStrike or something like that, but still. Okay, market is
Let's
open.
look at this market.
So we're going back to the reds here. Oscar down 4%, Intel down 3.6%. That's not good for my options. Micron is down, okay, only 2.8%. I guess we'll go to 3% pretty soon. Palantir
Mhm.
down 2.5, Nebius 1.6.
Mhm.
Actually, let me pull it up here. It's better. Um, so Nebius, we're at 66. Okay. We'll see. Again, we'll see if that gap gets closed. Zeta down 2%, Reddit down 3%, but that has been performing extremely well. Our Applied Digital still holding above $15, so that's
Mhm.
fine.
Really
Rocket
good.
Lab, yeah, Rocket Lab holding the $40 for now. I think that one I'll add a little bit
Mm.
already today. Meta 740. Okay, again with that earnings gap here, might close it. Amazon to 226, not down much. Marvel down
Mm.
close to 1%. Uber holding up right now. Iron down 1.2. SoFi down 1%, but also holding that 20-day moving average. The local looks really like a type of meme stock with all of these moves here, but that's down 1.2%. Novo is flat for the day. Oklo, company worth $10 billion, generating nothing, is flat. Apple flat. Um, Nvidia flattish as well. Google is flat. Google, we're waiting for the DOJ decision, I guess.
Mhm.
I guess that's supposed to come out this week or next week. We'll see. AST Space Mobile back under 45 and a bit in no man's land at the moment. We'll see if we can. I mean, the 200-day moving average, I think, would be very attractive for those that want to add. PayPal is holding up. I have my options play for PayPal. I did it yesterday.
Nice.
So in the end, I bought $100 March 26 and $120 January 27, just to give me that extra time.
Mhm.
In case the March doesn't work out on time, then I still have my January 2027 ones. Wasn't that expensive either. And if it does work out, like if we can reach 100, or even if we can reach like $90 2 months before, um, 2 months before March, so in January, I think I'll be very, very happy with that move. AMD down 1.3%. United Health is green a little bit. Trade Desk is flat, so trying to find here, let's say, stable point at $50 or so.
Mhm.
Robinhood down a little bit. New Holdings is up 3%. I've seen a couple of upgrades for New today. It's an excellent company. The reasons why they're upgrading right now, I think there's one analyst who basically doubled his price
Mhm.
target, like from $9 to $18, um, based on something that most of us knew for a long, long time. Like, oh, they're executing and managing turbulent waters, whatever. Very, very good. And New was founded in 2013 during or just before a recession in Brazil, and they survived it and they grew into something
Mm.
insanely big. So now in 2025, you're going to tell me that you're convinced that this management team um, is a good one. I mean, everybody that looked at the company and the management for a long, long time knew that this was the case. Now, I do agree that the stock has been that's in the same range for over a year now, but the company has been growing and doing extremely well. So I don't hold it anymore because all of it is now in the Mercado Libre, which I wonder what this one is doing. Yeah, still in that nice range right here.
What is Supermicro doing lately, Neil?
What do you
I
say?
saw
50
someone
or
ask about
40?
that.
50 or 40? What do you think?
I'm gonna say 43s. What?
You cheat.
I did not. I promise. I have not looked at this in a while. It's time to go to AC, boys.
Vegas is better. 43, yeah, just under the 200-day moving average. We had a big crash here with earnings, probably because of, well, margins sucked and the fiscal 26 guidance is much lower than what they previously told us. So the only
Yeah.
name that's green right now is Nu, and Iron is flat a little bit.
Yeah.
PayPal is flat.
Yeah, let me look at my watch. Let's see if anything's green.
Let's
I
see.
mean, famous last words, but at least no, never mind. I'm not going to say anything.
Why is Intel falling? Probably because the excitement behind the reports have died down a little bit.
ASML is green right now, which is nice. Interesting to see this one. About 1%, but
yeah. What about Lamb? Lamb is also green a little bit. Interesting. Very interesting. Any specific names? What was
I'm kind of curious to see how like you mentioned, healthcare took a hit already, so they're not down too much. How about like ServiceNow and Accenture? I know those like AI consulting companies were down.
Yeah, so Salesforce, we've seen a small rebound from the start of the month. Today it's flat. They report, when is it here? Apparently beginning of September. Salesforce is, if I wanted like a very defensive play in software, Salesforce and Adobe is probably the two candidates. We've talked about that before.
Yeah. The only thing Salesforce I hate, Neo, is they're just pure acquisitive company. Like that's their main growth. So I'm not sure if I'd like that.
Yeah, but again, they're so profitable.
That's true.
Like very free cash flow margin has been increasing. So I guess it works. I still think that Slack was way too expensive, the acquisition of Slack, but okay. Let's see Snow. Okay. Snow is reporting, also next week. So Snow is next week, apparently. Adobe, later in September.
Yeah. How about Now? Did you look at Now?
ServiceNow is also a company probably that got hit. Yeah, they're all forming the same pattern. Accenture,
very similar.
Here, yeah. But that one reported already, very early in July. But yeah. Who else should report next week? Usually within next to Nvidia, other than Snowflake.
I mean, I know Marvell and Broadcom are the week after that, I think. Usually a week or two after that.
Yeah.
So yeah, September. Yeah. And Marvell may be the same week as.
Yes.
The same week. So those two are still left.
Yeah. Alibaba, I think Alibaba is Friday, which is very strange. It says here Thursday, but they've said it's Friday the 29th, I think. Iron is 28th as well.
People are saying ASML is trading like crazy. Can I see that?
This is the daily. I'll show you the weekly. Maybe it's better. So it's been, it went higher. It definitely went lower. Okay, that's 2022. Then went back higher in July, so last year. And since then, it's gone down. It was probably very overvalued here. And now we're here in the range where we're like, okay, great company, but we want to maybe see some positive comments from management, tariff-related, demand-related. So we'll see.
Appreciated crypto. Giving some little love here. Yeah.
Let me ban him real quick. um, but yeah, mm, I don't know. I mean, Palantir. I said it's a great company and all. I'm not touching this win in a market with so many opportunities.
Yeah, same.
I'm not willing to pay that much of a price for it right now. What did we discuss about? We did not discuss anything. I had a question before on the crypto thing, but why is
we were
this?
just we were wondering if this was one that was a scam or something. I forgot what we were talking about.
Yeah, but no, this is the space.
I don't know. Yeah, I don't know
the
this
space
one.
company.
Space company.
Yeah, the other space company that I'm interested in is MDA from Canada. I think that's one that has been under the radar quite a long time, has performed extremely well, and for some reason nobody talks about that. That's very, I don't know why. But yeah, let's go back to the heat map to close it out. Let's see if we have some big opportunities. I mean, we see some red. MD is down 2% today. Other than that, nothing that crazy. It's also there's like no macro crazy like thing that happened right now that should push the market lower. I guess the market is just waiting for.
Is AMD really down 2% right now?
It is, yes. Yeah, they're just waiting the Fed minutes, and that's about it. Rate cut September, maybe yes. Actually, let's see what the probabilities are. I've looked at Intuitive Machines.
Getting hangry, Neil.
Who's angry?
Hangry. I'm getting hangry.
Okay. Let me quickly do this. So there's still a 82.9% chance of a cut in September.
Nice.
Yeah, a bit lower than a day ago, a bit lower than a week ago, but still it's 82.9%. So I guess it's going to happen. Question is it 25 basis points or is it 50 basis points?
Bon.
No love for Intuitive. No, I just like Rocket Lab too much to even bother looking at something else. Like when you find the perfect company in the perfect industry, why spend time looking at something else?
Yeah, and then when you get an Intel, you just got to keep looking for others.
Yeah, you buy AMD and then you make 100% on Intel options in a week after struggling for 2 years. But yeah. Anyways, that's all we've got for you for today. I guess tomorrow we'll have another therapy session if the markets continue to go down. But hopefully these are helpful. I mean, the last time we did those, it was very helpful because we went up like crazy afterwards. So yeah, we'll see each other tomorrow. Thank you all for joining. Have a good day. Don't stress. Go touch some grass. It's always nicer outside.